On to your markets news now. Asian markets rallied on a possible U.S. tariff reprieve, while also buoyed by a significant fiscal stimulus out of China. Hong Kong, which has been lifted by tech stocks in recent sessions, registered gains over 3%. The Nikkei share average rose by 0.77%. The Hang Seng Index jumped by 3.3%, while the Shanghai Composite Index rose by 1.2%. The JSE currently is in the green. Today we see that the All-Share Index is up 0.9%. At 88,538 index points, the Rand is trading at 18.36 against the US dollar, 19.82 vis-a-vis the British pound, and 23.66 against the euro. Gold is trading at $2,899 an ounce, platinum at $960 an ounce, while Brent crude oil is trading at $69.58 a barrel. All right, we're going to unpack the markets with Muhammed Wagley. He's a portfolio manager at Sasfin Securities. A very good afternoon to you, Muhammed. So there's been a lot of toing and froing with the tariff story, with the US administration now deciding to postpone imposing tariffs on car makers in Canada and Mexico by a month. And that seems to have calmed US markets down somewhat. But why, and when this is just merely the kicking of the can down the road? And on top of that, there are still enough tariffs in place now that will result in US consumers paying more at the tills.
So, well, first of all, a good afternoon to yourself, Numpu, and to all your viewers out there. So I think it's really just a case of brief respite. I think one thing that's really worth considering is that, this could also very well be a case of posturing. On paper, it does give the car manufacturers some time to move their operations, which is definitely easier said than done. But perhaps it also gives the Canadians some time to maybe reconsider their stance on tariffs. I think they've taken a very well-defined position. They don't want to be bullied, and that makes a lot of sense. But 30 days is a long time, and 30 days in a Trump administration is also quite a bit of time. So I think that is also playing a part. But, at the end of the day, I think the bottom line is that there's going to be inflationary effects on the consumer, starting with the US consumer and then sort of broadening out to the rest of the market. So we'll see how it plays out, but it doesn't really paint a pretty picture, even though we did get a bit of respite on the day.
Yeah, so Brent crude oil prices, they've hit a 3-year low, going below $70 a barrel. That's good news to counter inflationary pressures that we're all worried about. But how are you seeing this market's dynamics?
I think if one was really looking for solace, they couldn't find it there, but that's probably the only place we are going to find it currently. So really what happens, I think we dropped below $70 a barrel, and that was yesterday on the back of similar sort of tariff news. But in addition to that, OPEC is going to be rolling back some of its production cuts in April, which would then improve supply, but then again, put some downward pressure on the price as well. So in essence, what's happening here is markets are worried that the tariffs are going to accelerate inflation, slow down some growth, and that in turn is going to lead to headwinds for oil. So really what we're seeing is a oil market adjusting to what the new normal is going to look like with all the tariffs and things like that. And, while all of this uncertainty remains so sort of pervasive throughout global markets, I think it's likely that we're going to continue to see oil depressed at these levels.
So we just had a conversation with the CEO of FirstRand, Mary Vilagazi, and of course they came out with their half-year results for the 6 months ended December 2024, reporting headline earnings up 10% at 20.9 billion rand and giving shareholders a final dividend of 2 rand and 19 cents. Just your thoughts very quickly on this stock.
Broadly speaking, I thought they were a good set of numbers. That dividend was a 10% increase. Always love to see that. If we look a little bit deeper, we saw some solid performance in their broader Africa portfolio as well as the UK operation. So seeing some good growth there. And it looked like they were kind of surprised by how well the retail credit segment did, relative to expectations. And that wasn't just in South Africa, but in the UK as well. So some good performance there. It was a good set of numbers. I've got to say the the market did like it initially. I think when I had looked at around open, we were up, or they were up rather close to about 2%. It has come back somewhat slightly, but I didn't really see too many red flags here. I think all in all, a good set of numbers for FirstRand.
All right, Muhammed, thank you very much. Always a pleasure to have a chat with you. That was Muhammed Wagley. He's a portfolio manager at Sasfin Securities. Let's go for a quick break.